Harley-Davidson just released their Q4 and full year 2024 results on February 5th, and it was ugly. Guys, my name is Rick, and this is the HDVIBE channel. In today's video, what I'm going to do is go through some of that key information from that earnings release and give you my thoughts and perspective as a certified public accountant who's worked in the finance area for over 35 years now. I'm also a consumer. I have 3 Harley-Davidson touring motorcycles, and I work at a dealership as a Harley-Davidson Riding Academy instructor. And we'll get into it right after this. As I'm going through this information, I'd appreciate it if you guys would give this a thumbs up if you like it, share it with your friends. Also, hit this button right down here so you can subscribe to the channel. And more importantly, leave some comments down below on what you think about Harley-Davidson's performance in 2024, what you think about some of these dealership closures, and also, are you considering buying a 2025 Harley-Davidson? And if so, what model would you consider buying in the current lineup? So let's first start off with some of the key takeaways from 2024 in terms of the full year for Harley-Davidson. So they delivered diluted earnings per share, and earnings per share is how much income they make per the number of shares that they have outstanding at the given time at the end of the year, was $3.44. DMC, which is the piece of Harley-Davidson that sells motorcycles, parts, and other motorcycle related components to the dealership. So Harley-Davidson's revenues are based upon what they sell to the dealerships, not what the dealerships sell to us as the consumer. So operating income for the Harley-Davidson Motor Company was $278 million, which represented an operating margin of 6.7%. They made money for the full year, which sounds pretty good, but an operating margin essentially is, here's all of the things that generated income for the Harley-Davidson Motor Company versus their expense. So they only made 6.7% on those revenues that they sold to the dealerships. Harley-Davidson Motor Company global shipments of motorcycles were 148,862, or down 17% as compared to 2023. That's a huge decrease in the number of motorcycles that were shipped to dealers for us as consumers that we could purchase. Now here's a highlight from the perspective of Harley-Davidson does have a very strong hold and a big percentage of the market share for touring and trike and CVO bikes. Retail sales of those bikes were up more than 8%. So I think what we can say from that, both as from my perspective as a consumer and as a certified public accountant, is it's pretty clear Harley-Davidson is focusing on that segment of the market, touring, trike, and CVOs, because that's where they make their money. The other piece that Harley-Davidson focused on is dealer inventory. So what they're saying is dealer inventory levels of new motorcycles finished the year down 4% as compared to 2023. So I guess that's good from a dealership perspective, and hopefully that helps out the dealership because they did have a problem. Dealers were sitting on way too many bikes. So the other piece of Harley-Davidson is obviously they have the financing arm, which is called Harley-Davidson Financial Services. They actually had operating income of $248 million, which is up 6% over the prior year. So what's driving that? Some of that is obviously interest rates, right? So interest rates are higher. They charge a higher interest rate on financing those bikes. Obviously, the higher the interest rate is, the more money Harley-Davidson Financial Services is going to make. So now here's where it gets interesting. In the fourth quarter, just the last 3 months of 2024, Harley-Davidson actually had a loss of 93 cents per share. The motor company revenue was $420 million for those 3 months, and that was down 47% as compared to the fourth quarter of 2023. Motorcycle shipments were 14,010, and this number will blow your mind, down 53% as compared to the prior year fourth quarter. And then global retail sales, so this is around the world of new motorcycles, and again, this is at the dealership level to us as the consumer, was down 15% as compared to the fourth quarter of 2023. So let's get into some of the commentary and the press release and some other pertinent information, and then stay tuned. I'm also going to talk a little bit about some of the guidance that Harley-Davidson expects and what they expect in 2025, which I found very, very interesting. And as a consumer, you're probably going to want to hear this, and it could have an impact on you, even if you're not planning on purchasing a motorcycle in 2025. But if you have that Harley-Davidson motorcycle and you have that dealership close to you that you go for service, this information could be important. So in the fourth quarter, global motorcycle shipments of Harley-Davidson Motor Company decreased 53% from a year ago. And that was really due to the focus on dealer channel destocking and market conditions. What does that mean, dealer destocking? Well, what it means to me, again, coming from a public company that I currently work in, you don't want to stuff your channel for where your product is going out. And that's exactly what Harley-Davidson did at the end of 2023. Harley-Davidson recorded sales and income on that, but they sat in inventory at the dealership level, again, putting a lot of pressure on those dealers to try to sell those motorcycles. And as we saw, as you got midway through 2024 and getting into late 2024, and we'll see if it continues in 2025, Harley-Davidson was offering incentives, which you haven't seen that for a number of years. They're offering incentives to the consumer that were really being backed by Harley-Davidson. And my guess is that's what probably led to a big loss for Harley-Davidson Motor Company in the fourth quarter of 2024, because they were helping out those dealers clear out all that inventory. So that's what channel destocking was all about. So they really had to kind of hold up shipments and really sit on that inventory at the Harley-Davidson level versus that inventory sitting at the retail level at the dealerships. So I'm going to go through another question that comes from an analyst at UBS, which is another big investment firm. He says, and I'll summarize this, your guidance for motorcycle revenue flat to down 5%. So he's referring to 2025. So Harley-Davidson is basically saying their motorcycle sales, which were already down in 2024, are going to be either at that same level or even decrease by 5% in 2025. He says, I think you said price would be positive for the year, so how does that imply percentage of units down a little bit more to flat 5%? And then just on retail, I know you gave some color for the first half versus the second half, but I'm assuming that if you're trying to clear inventory, you're shipping below your retail expectations. What should we think as a rough range for your retail expectation for the year? So we can just kind of move through the year and see how it's tracking versus your guidance and maybe kind of adjust our expectations accordingly. So they're trying to model what Harley-Davidson is going to do in 2025. And obviously the key to some of that is the retail has to clear out. They got to get that channel buildup out of the pipeline so that Harley-Davidson can then record revenues on motorcycles that they're selling to the dealership. So the CFO answers this and he says, okay, so I'll start with, I think from a wholesale perspective, we probably think flat to down a little bit. So as we look at that, and that again is referring to 2025, relative to your question on retail overall, for the right now, from our commentary that we talked about, we think retail as being flat in 2025. So they're basically saying they think the dealerships are going to sell about what they sold in 2024 in 2025. So certainly, he says, a little bit difficult to predict as we think about macroeconomic situation. Again, a higher interest rate situation, although that may be coming down as we kind of float through 2025. It's hard to say. We have a new administration in place, and things are changing by the day. This is February 7th when I'm recording this, so there's been lots of changes since January. But overall, he says, we're thinking about an environment globally that gets us to flat retail wholesale. maybe a little bit off, but then pricing will be a little bit favorable and hopefully answers your question. So why did these analysts ask these questions of Harley-Davidson executives? Well, the primary reason is they're going to try to say, should I recommend this stock? How should I rate this stock? Should it be a buy? Should it be an outperform? Should it be a hold? And also they try to place price targets on the stock, right? So they're saying, you know, Harley-Davidson right now is trading at almost a 52-week low, right around 26 something dollars per share. I think their 52-week low is about 25 and their high is in the upper 40s, almost $50 a share. So as of Friday, February 7th, when I'm recording this, BMO Capital came out and lowered Harley-Davidson's price target to $35 from their previous price target of $40. And what does that price target mean? That price target means they're saying within the next 12 months, we would expect Harley-Davidson's stock price to go from where it is today to $35. And in the past, they said we thought it would go from wherever it was at the time they gave that original guidance to $40 a share. So they dropped their target price by $5 a share. So the outlook that Harley-Davidson has put out, the results that they showed or lack thereof really in 2024, they lowered that price target because it just doesn't look very positive, and the economic conditions for a consumer discretionary company like Harley-Davidson, it doesn't look good. And we also have a very uncertain environment. We have a new administration that's come in. There's a lot of changes that are happening very, very quick. There's a lot of talks about tariffs. So if you think about tariffs and the components that go into Harley-Davidson, and I did talk about tariffs that Harley-Davidson is getting hit in the EU. And if you want to go check that video out, it has been very popular and has some very good information in that. I'll put a link to that down in the description. But these times are going to be tough for Harley-Davidson. So thinking about this as a consumer, I'm a little concerned. I'm also concerned from the perspective of being a Ride Academy instructor. These dealerships are going to struggle even more in 2025 to sell motorcycles. In order to keep those lights on, they've got to sell motorcycles, they got to sell parts and service, and they've got to sell motor clothes. So if people are more concerned about the basic necessities, they're not going to come into the dealerships as often. They're not going to buy that $50 t-shirt. They may not bring their bike in for service because we know Harley-Davidson service, while it's expensive, right? It's $150 an hour to get your motorcycle worked on. Thirdly, the motorcycles are expensive. And a lot of people, they can't afford to pay cash for these motorcycles, so they're financing the motorcycles. And you know the interest rate environment that we're in currently, interest rates are high relative to what they have been over the last number of years. And so, you know, you may, if you have great credit, you may get a Harley-Davidson interest rate of 10, 12, 13% on a motorcycle if you can't pay cash. That, again, drives that payment up, drives the cost of that motorcycle up, and people don't want to make a $500 payment on a motorcycle when they're worried about how much their rent is. They're worried about how much food is costing them still. They're worried about how much gasoline is costing them. So it is not good at that dealership level. I mean, at the Harley-Davidson level, they're making enough money. They're generating enough free cash flow. As a matter of fact, they even bought their own shares back, which from typical perspective, from a corporate finance perspective, that means they think their share price is too low. And so they're buying back and returning that to their shareholders. Now, as a consumer, does that help me out? Probably not. They're using that cash to buy back shares, but what that does, it actually increases or elevates what they call earnings per share. So the fewer shares you have outstanding, and as they buy those, that reduces that number. They can have that denominator be lower relative to the income they're actually making, so they can make their EPS look better than it really is. But if you look at the raw number, the raw numbers of income that Harley-Davidson has made in 2024 and probably will make in 2025 continues to go down. But again, they're generating enough cash. They can stay in business. They have financing arrangements in place and those sort of things. But the other thing I will say, again, from a consumer standpoint and from a Ride Academy instructor standpoint, is it's clear, and there's some commentary in their script, that Harley-Davidson is focused on touring, trike, and CVO. They redesigned the cruiser line, the soft tails essentially this year. So they're probably gonna have some pickup in that, but where they make their money is on the touring bikes. And if you're watching my channel, you probably have a touring bike more than likely. And you're probably also in the age range of, I'm gonna say 35 to 65. That's who mostly watches this channel, and I fall right in that range too. And what does that mean? That means Harley-Davidson's core customer is probably in that 35 to 65 year range. Those are the people that can afford, potentially more easily afford, those expensive motorcycles, and they're focusing on that segment of the market. And I'll give you some anecdotal information. Again, I said I'm a Ride Academy instructor at a Harley-Davidson dealership here in the St. Louis area. We often poll our students and say, once you successfully complete our course and you get your motorcycle endorsement, what motorcycle are you planning to buy or have you already bought? And it is almost without fail, any of those students that are 30 years and younger, they rarely, if ever, talk about a Harley-Davidson motorcycle, even though they're taking the course because it's available at a Harley-Davidson dealership. Now, on the converse of that, if you ask that same question of someone who's 35 and older, and we have students all the way up into their 70s, they will say, I want a Harley-Davidson motorcycle. And I think Harley-Davidson has skewed their marketing, their product line, all that way. There's really no entry-level beginner bikes. I think the least expensive bike is around $20,000 in the Softail line, maybe slightly less, but right in that range. And then you start getting into the Grand Touring line, even the Adventure Touring, the Pan Americas. On the Grand Touring line, they're certainly very, very close to $30,000 and going up. You get into the CVO line, you're talking $44,000, I think, MSRP, plus then you have all your dealer fees and add-ons and all those sort of things. So it gets pretty expensive. So the other thing I think as a consumer we need to think about in the current environment is we've seen a lot of dealerships that have closed in 2024. Dealerships that have been around forever and just one day they're open and then they announce they're closed. I think in 2025, you're going to see more of that because these dealerships are just not going to be able to generate enough cash to stay afloat. And I think you're going to see, especially in the major metropolitan areas, I'm going to say, for instance, in St. Louis, we have 3 dealerships, Harley-Davidson dealerships, within probably a radius of 25 miles, depending on where you live in the St. Louis area. But if you're in the center of sort of the St. Louis County area, which is where most of the population is, there's 3 dealerships that are probably 15, maybe 20 miles apart. And so what is that doing? That's robbing customers from one dealer or the other, and every dealership is selling less bikes. So I can see in major metropolitan areas where you have, you go to Texas where you have many, many dealerships in the Dallas area, you have many, many dealerships in the Houston area, that you will see dealerships just saying, we can't make it anymore, even though we've been here. A lot of the family-owned ones are closing down. So I think we're going to see more and more and more of that. So guys, I'd appreciate it if you leave some comments down below, give the video a thumbs up, share this with your friends, and let me know what you think about what Harley-Davidson, the performance or lack thereof in 2024 at the motor company level. How's your dealership doing? And also what you think 2025 will bring in terms of what impacts that could have on the dealerships in your area. If you want to see more about my analysis of the Harley-Davidson market, go check out this video, check out this playlist. And again, don't forget to go right up here and subscribe to the channel.